please, like, would love to chat in between the slides or during the slides. Like, you guys definitely don't have to let me blab. Um, and we can just kind of get through these, and I can speed through and skip over things if you guys have discussion points or things that are more exciting to talk about. Because I think honestly, all of our experiences and like how this stuff actually relates to real life is way more valuable than the data itself. So anytime. Um, so just a little bit, I think most of you guys know who I am, but I've been an agent since '04, so I've been through 2008 and COVID and all the fun and just I think I started doing this when I was a team leader for the office and then just kind of stuck and Dana asked me to keep doing it and it kind of holds me accountable to staying up to date and I enjoy it. So I do still actively sell. I'm an investor. I also have a property management company now where we manage over 300 units. We're growing very quickly. So if you're in the Columbus market, and you have clients that need a property manager, please keep me in mind or keep us in mind. And then I still do some real estate coaching outside of my team for I Love Coaching as well. So feel free to reach out if I can do anything to help in the meantime or, in between the monthly meetings. Market trends. So again, I do have some cool new slides, or at least I think they're cool, but I'm a nerd. You guys know that, with some new information. So we'll be going through that today. But otherwise have most of the normal stuff in here as well. So just a reminder, if you're new and if you're not, I'm still going to remind you because I go through a lot of stuff that the goal should not hold yourself to the standard of understanding and knowing all of this. But I encourage you to pick one or two things that can really translate into benefiting your clients and just know those couple things really well. I think it's a really easy way to set yourself apart um, between you and other agents. There are the number of listing appointments I've been on in my career that were competitive, where you ask the seller, like, what did the other agent say? And they don't even bring a market analysis with them on a listing appointment. Like, your bar is not high, but having a little bit of knowledge goes a long ways in setting yourself apart if you do end up in a competitive situation. So I would encourage you to pick a couple things and really dive into them. As always, if you guys actually, I'll put it in the chat so you can remember, but it would be super helpful if you just email me at troy@marshhomegroup.com. Allison will send over the slides if you would like them. Also, the recordings, if you want to go rewatch it. Since I talk slow, it would definitely want to be at a higher speed so you can like do it at 2 or 2.5%. But it'll be on YouTube like usually within a day or two. Heather has the full video up on YouTube. So I know, Michelle, you said you're a team leader, so if you wanted to share it with anybody, it'll be on the One Team YouTube like probably by tomorrow or at the latest Wednesday. All right, interest rates. So obviously interest rates have been the conversation for a long time. If you guys haven't been paying attention, I don't have a necessarily a slide on this, but interest rates have definitely correlated with oil prices. There was a little bit of a difference for a while, but for the most part, we've been kind of going in line with oil prices. If you haven't heard, probably the closest to a real ceasefire agreement with Iran we are this morning. So my recommendation, as the interest rates drop today, lock it in, because if it's anything like the last time 20 times, it'll change by tomorrow. Somebody will fire a missile at somebody. But I think today will be a good day for interest rates. You can kind of see that here on the end for Mortgage News Daily. So I would definitely reach out to clients. I'm having trouble here, sorry, with the Zoom pictures. So sorry I look a little bit distracted. Admit all. Um, All right. Sorry, I'm trying to get everything positioned here for myself. So, all right. So that's interest rates. To put it into a little bit of perspective, though, even where we stand currently, and I probably should have done a quick poll on this, but last year at this time we were at 6.89% for a 30-year fixed on this day last year. So, that is an interesting, and actually, we were a week away from 6.97%. So, meaning a week ago last year, we were at basically 7%. So, putting today's rates into perspective, we're, quite a bit lower than where we were last year. So, that's definitely a good thing. God bless Claude. Um, but Claude put together this graph that I've been showing you for the last couple months in terms of how oil prices and interest rates have correlated. You can see that interest rates have actually been a little bit high compared to the major drop in oil prices. And so my expectation is that if oil prices stay low, that we're probably going to see interest rates start to drop here as we go throughout the week. So again, the correlation's been pretty consistent. Um, so right now we have a pretty large gap, especially since oil prices went down a lot yesterday. Consumer confidence, or this morning, consumer confidence remains low um, compared to historical averages. However, as we get into the next couple slides, you'll see that although people have a negative outlook. There's a lot of speculation on why that is. Is that the 24/7 media cycle? Is that, the fact that the media is just overall negative on, or certain media is overall negative on the administration and everything that they do? Or what's the reason behind that? But either way, consumer confidence is extremely low. However, if we zoom in, so these charts show the blue line is like the 90-day average, and then the dashed line is the monthly average. If you do look at the last month, so that would have been May, we have seen upticks in everything. So after things kind of going down basically since the war started, last month was the first month where consumer confidence seems to have hit a floor and is now on the rise again. So we'll see what happens with that. This is the new stuff, and unfortunately, all the words aren't overly exciting. I have a couple pictures coming up on the next slides. But the biggest thing that I thought was interesting here, and this is basically Bank of America started tracking their credit card spending and kind of breaking it down across the different income brackets. So they compare like higher income, middle income, and then low income and how their spending changes over time. And the reason why this is important is because inflation, like that the government puts out, tends to really lag. It's at least a month old most of the time, and it also depends on surveys, whereas obviously Bank of America has the real data. And basically what they're saying is that consumer spending is up 5.1%. And the majority of it is not actually driven by higher gasoline prices, which is what a lot of people expected. And also the most interesting thing, and I heard this last week, is that the gap between the higher income and the lower income like segments actually has narrowed in both spending and wage growth, meaning that the higher income um, group of people had been spending a lot more, and also their wage growth had been growing over really a lot of this year. And it was leading to people saying, basically, if you guys have ever heard the term K-shaped economy, but basically where the higher incomes were all growing and they were all spending their money, and that's why all of the growth was happening in the economy. And at the same time, the lower income was like basically going down, 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 down. Now, obviously, we're not going to reverse months of that being the case in one report. but it's interesting to see that that gap is shrinking. And I actually have a picture of it on the next slide. But basically, the last paragraph talks about the fact that consumers' financial health is remaining strong, and there's no clear signals that households are resorting to borrowing to support their spending. So sometimes people are still spending money, but they're actually carrying balances on their credit card, which is definitely not a good thing. But they're saying that they're not seeing that. So savings rates have fallen. However, their overall level of savings is relatively elevated. So during COVID, we saw savings go up a lot, but a lot of the speculation on why that is just because people couldn't do anything, like they weren't going on trips. And now they are again, but they're not dipping substantially into their savings to do that, at least as of yet. And then they're just talking about tax refunds, which I mean, it makes a big difference because a lot of money gets spent during tax refund time, but I don't think it's necessarily like an indication of the strength of the economy. So yeah, so this is just showing the year over year spending versus the month over month spending. So month over month spending is going down, but compared to last year, we're still spending more money. So that's interesting. And then I was just very surprised by this because especially given, gas prices, I expected to really hamper the lower income bracket a lot more. Um, but basically, wage growth last month. Now you can see like higher income wage earners have been making more money each month for basically the last year outside of a little bit of a dip. Whereas up until the last like 3 months, the middle and lower incomes had been going down. But now the last couple months, the lower and middle incomes have been actually going up. And last month, the higher incomes went down in terms of wage growth. So again, something to keep in mind. Um, it's definitely not what people predicted were going to happen. But right now, the wage growth amongst lower and middle class or middle, when they break it into three segments, is actually higher than the higher income. So we'll see what happens there. This was something Mortgage News Daily added this month, which I thought was cool. Um, Basically, this is the percentage of people that are homeowners, so that percentage of houses that are owned by an owner occupant, around 65%. So I think right now we're at 66%. So you can see over here, this is the percentage. These graphs look really like very large differences, but really we're just talking about a couple percent. So we peaked during the like right before 2008 at like close to 69, almost 70% of homes being owned by owner occupants. And then at the bottom of, that cycle, we ended up, close to 63%, and now we're at 66. So all right, national activity, active listings is up 2.2% year over year. So again, not significantly higher, but definitely well above like the low inventory years following the pandemic. Um, so it looks like the different colors are weird, but we're still below the 2017 to 2019 average, but we're the highest year basically since 2019. So new listings were up a little bit by 2.1%. Again, definitely still lagging like the COVID immediately following COVID and the COVID years where we were having more new listings, where we are eating up that inventory quickly. This is good for real estate agents who get paid based on the number of closings. Pendings, properties in contract is up 4.3% year over year in May. That is the fifth month in a row of growing pending contracts, which that's the first time that we've had 5 months in a row since basically what does it look like the end of 2021. So that's at least a positive sign that we're continuing to see more and more houses going into contract each month. Also, days on market, definitely following the trend line. So their headline is that it continues to normalize, but we're 1 day longer than last May. So again, pretty in line. Year on year listing prices dipped by 2.4%. So that's interesting. Um, I pulled over NAR's stats though, and although the list price dipped, when we look at sales price, we actually saw a 1.3% increase compared to last year. So in spite of the list price going down, the sales price is up for the 35th month in a row. Now it's been not up a ton nationally, but still. And then housing affordability increased um, basically across the board in all regions last month. So again, I think that, yes, the market is slower than it has been in a lot of places, including in Columbus. Um, but I think overall, the overall health of the market, when we look at it from, getting back to a more balanced market, is continuing to move in the right direction. So we had um, days on market, again, it went up a little bit compared to last year, but it was still down compared to last month, which is normal, right? May and sometimes June are usually the best months of the year. 35% of buyers in April or in May were first-time home buyers. That was 5% higher than last year. And 25% of transactions were cash, which is down by 2% compared to last year. And then the number of investor or second home transactions was down 17% compared to last year, which was very, very interesting to me. Um, but this was another one. I had somebody send me over the weekend a video of some guy dramatically talking about how foreclosures were up by 30% in Franklin County, I think, which is for those of you not from Columbus, it's like the main county in Columbus. But nationally, the actual number of distressed sales was down from 3% 1 year ago to 1%. So all those people that are saying there's like this huge foreclosure boom coming, you can send them this slide. Prices reduced, still elevated compared again to COVID timeframes. But when we look at the average, we're at 17.5% of listings, which is down from last year. And it looks like if we go back to like the 2017, 2019 range, it's like up 1% compared to like pre-pandemic normal. So it looks like we're definitely kind of getting back with a lot of these things into what I would consider the pre-pandemic normal. So now we're going to jump into Central Ohio real quick. I guess I'll stop there for a second. Anybody that's here that's not from Columbus that might want to jump off. Do you guys have any questions or comments before I jump in to Central Ohio? I have a lot cooler stuff for Central Ohio, but if you don't care about Columbus, I'm not going to judge you. Anybody have feedback or questions before I keep going? No? All right. Well, I'm going to keep rolling then. Maybe give you guys some time back. All right. Months of supply, we still remain way below the national average when it comes to months of supply and way below a balanced market. So we're back down to 1.5 months of inventory in Central Ohio for resale. And then when we look at the national stats, nationally, there's a 4.5 month supply. So to put into perspective where we're at compared to the national average, we're still way below. This is the same slide from earlier, just something I didn't talk about. When we look at new builds, if we go back to May of last year, we were at 2.6. Now we're at 2.7. Again, rising from last month, but definitely not anything that's out of the ordinary per se. Days on market, again, we're down 6 days from last month, which when we look at the trend from last year, that's pretty normal. Although April to May change last year was only 3 days, so we'll see what happens next month. Average list price or average sales price to original list price was 99%, which is exactly the same as it was a year ago. So we were a little bit flatter throughout the spring last year. This year, we've kind of just continued an orderly trend up. When we look at for sale, so the number of for sale in Central Ohio is up almost 12% compared to last year. New listings, though, were only up 0.3% in May. So I would anticipate with higher pendings and basically a flat listing increase that we would start to see the percentage increase year over year start to flatten out if that trend continues. We saw 5% more solds. So if we do the math here, that is what, 150 extra commission checks that happened, or actually 300 extra commission checks if you have both, consider both sides, that happened this May compared to last May. So that's a number that everybody likes to see. When we talk about Dublin schools, new listings were down actually compared to last May by 4.5%. But remember, we've been talking for the last couple months, especially in some of these suburban areas, that the pending sales were up huge. I think Dublin might have been like 50% last month. And you can see the solds were up 29% compared to last May. So that's just showing those pending sales, all closing. If we look at the gap between the active listings and the solds in May, it's pretty similar to last year. Obviously, the numbers are bigger. It'll be interesting to see though what happens with June if the number of solds continues to increase or if we have kind of hit a peak. So we'll see what happens there in Dublin. Um, Dublin new construction. I'm not sure this is one. Yeah, we're not seeing like a lot of significant change here. We're seeing it looks like a lot of the new listings are being absorbed, but not a ton of change in actives, just up 2.5%. So, all right, in Hilliard, new listings were down 13.5%. Remember how we always talk about the gap between new listings and pendings? We saw that basically the exact number of properties in contract that were added as new listings. So that's typically going to create a situation where we have, essentially like 1 month worth of inventory, and that's basically what we're seeing. So unless we see this gap break back out again, like we saw last year, that led to this increase in active available listings. When you have more listings coming on the market than are going into contract, then obviously the following month you'll have more active inventory. We have not seen this gap be nearly as large for a lot of the year. So we'll see what happens now that they're the same. I would anticipate that the new listings year over year will be flat to maybe even lower. Or I'm sorry, the active inventory flat to even lower. New construction, we did see a little bit of a breakout with regards to more new listings than went into contract in Hilliard. Again, keeping in mind this isn't every single new construction listing because not everyone gets listed on the MLS, but that's something to keep in mind. In Olentangy, we saw new listings up and inventory up and sold up. So everything was up, but look at this gap. So for 2 months in a row, we've had a gap again after having, 3 or 4 months basically of everything trending to be the same in terms of new listings versus pendings. So if you have a buyer looking in Olentangy schools, may be an opportunity that wasn't there a couple months ago. And if you have a seller in Olentangy schools, this is absolutely something that I would be talking to them about with regards to should we, consider a price reduction because the active inventory is continuing to rise here for now 3 months in a row. And you can see what it did last year from, from the spring all the way into the summer. This is pretty normal, but again, this is something that I would be using to talk to my sellers about. And then new construction in Olentangy kind of follows the same trend as in Hilliard. So we've talked about all that stuff. All right, this was one thing I wanted to spend a little bit of time on. So the trend line for price increases on the sold side of things. So on this graph, we've got the average listing price up here, the green line, average sold price down here. The trend line for average sold price is increasing significantly this year, even faster than it did last year. And the one thing that which you can't see because we've kind of that's gone off the graph, but maybe next month we'll look at that. Oftentimes you see a bigger dip in the winter for the sold price. We had like a very slow ride down and we didn't like go to a very low trough. Like you can see on the average list price, there's like this very deep trough. And that's normally what you see with the average sold price. We didn't really see a trough. We kind of like it came to the bottom and then it just kind of was flat for most of the winter. And then now we're seeing this huge acceleration. We're still sitting at plus 5% year over year appreciation. I think some of this on the average side of things has to do with the fact that we're seeing more higher price properties. I just had a client reach out who's buying some land in Olentangy, and it's like, I mean, 5 acres is now going for 400,000 to 500,000 for a 5 acre property that's completely undeveloped. Way far north of Powell, still in Olentangy, but obviously with the new high school being built over there, I think that area is going to develop. Not that it wasn't already on the way to this, but I think it's probably going to speed up development in that area. So I think that just the higher end, like I feel like $2 million listings are a dime a dozen anymore. I think I saw a $5 million listing the other day. That's just stuff that honestly was unheard of like 10 or 15 years ago in Columbus. So I think that's driving the average sales price up. So again, if we looked at the median, maybe it would be a little bit less intense. But I guess say all that to say that if buyers are waiting around for lower prices, even lower interest rates may not be offset by the increase in prices. But the other thing is look at the gap between the average list price and sales price is only $62,000 difference. What that's telling me is that sellers are getting more realistic about where they're listing originally, and they're not negotiating as much. So we went through a period, especially last year, where interest rates were high. And then in the fall, things really slowed down, as you guys know, and we got almost to $100,000 difference between the list price and sales price on average. We're definitely very tight again on that. So just something to keep in mind. All right. And showings. So Allison and Eli on our team put this together every week. And look what happened last week. So for the first time since we've been tracking, actually, I guess I lied. Well, it was because Easter was on a different weekend last year that it did it. But for the first time ever since we've been tracking, this last week we had more showings happen than in 2022. Now, part of that is because the market is really good, or there's more people showing last week, which is shown by this. But also remember in 2022, things were trending down in a big way right now. So it's all kind of related. But I think the fact that we had more showings happen last week than ever before since on this week in any given year over the last 5 years, or is that 4 or 5 years? I always screw that up. I think it's 4 years. Um, we That's an interesting thing to keep an eye on. I mean, you can see how it really shot up. So I wasn't necessarily expecting to see that. But if you look at compared to last year, like last year, the trend line was kind of going down. And I think we've talked about that. This year, it's obviously going up. And the interesting thing is even though we've had a lot more showings, the showing per listing this year has kind of trended in line with like the average. But look at this. Actually, the average showings per listing is even trending up. So I don't know that we've trended up enough considering we're basically just back to last year to like get overly excited about it. But it's interesting if we continue to see interest rates drop. It'll be interesting to see if we start to see more activity. I mean, it's an interesting, I think we've all been talking about it all spring about how we've had a lot of buyers that are coming to look at houses, but they're not pulling the trigger. And it'll be interesting to see if everything truly is, over with regards to the Iran war conflict, whatever you want to call it, and that turns into lower interest rates where we get back to this time like in March where we had a lot of activity and things were really looking good and then we got involved in this thing with Iran and it's kind of made things go all over the place. If that stabilizes and we see rates come down, we see gas prices come back down. I actually heard that on CNBC this morning that gas prices this morning at like 7 a.m. or whatever were exactly the same price as they were last year on this date. And so again, if we start to see all that stuff normalize and go back to where we were, do we see rates come down? I don't know the answer to that, obviously, but I think if we do, we could end up seeing a stronger summer than what we would expect. Mortgage applications are kind of showing that. So purchase applications are up 5% year over year, and then refi applications are up almost 29% year over year. But that's again probably the fact that a year ago rates were still up near 7. So this is something we'll definitely be keeping an eye on as we move into what traditionally is the slower season. I still haven't found a reason to remove this, although it's getting very old now. It looks like it goes back a year. Um, but I still just want to point out that the number of buyers in the market was significantly higher 10 years ago than it is today. And so I think if we see interest rates come down and we continue to see that affordability index increase, that we will see some of this gap between the number of buyers back here and the number of buyers today, the gap will shrink, and that will lead to more buyers in the market, more homes selling. So even if we don't see an enormous price increase over the next year or two, what we really need to see for the real estate industry as real estate agents is the number of sales increase. And I think affordability coming back to more normal levels will increase the number of buyers and therefore the number of paydays for all of you guys. Um, all right, rental market, not a ton of change, but actually at least some positive momentum with plus $3 over the last month, and that gives us a $3 year over year change. But when we look at like where we've been at on average, we're basically still in the same spot. So I would say we're increasing monthly rents by small amounts when we're renewing. And then a lot of times if we're relisting, we're maybe going up by 50 or $100, but we're certainly not seeing a huge increase in rents by any means right now. All right. I did add a couple new sources like I told you guys, but other than that, that's it. What do you guys got? Any questions, comments?
First time home buyers. I saw that on the Columbus Realtor, I think. And then I see it national. What do you think's causing that? It's not like interest rates.
Well, I mean, I think what we don't have, but we've seen before, is the average age of a first-time home buyer is a lot more than it used to be. So I think it's somewhere in like the mid 30s. So I think some of it is just a function of, people. We probably had a little bit of a reduction in that over the last couple of years because people thought that prices were going to drop. And now that they have not dropped, I would expect that that probably has something to do with people being tired of waiting. And rents aren't going down in most places. Like maybe they're not rising significantly, but they're also not going down, right? And so, like, what are you waiting for, basically? Like, if prices are going to keep going up and you have the down payment sitting in the bank, why not go ahead and lock in today's payment?
I thought
You
the
know?
OFA recent announcement, I think 10 different mortgage lenders all texted me and called me. But anyway, it's too soon to see if that does much, but that would make sense to me that you'd see a spike after a program like that.
Yeah, but
But
I mean, obviously that's not a national program.
right.
So that wouldn't have impacted last month's sales. So I think a lot of it is just that, and I think that probably the fact that things are a little bit less competitive right now, right? That's probably the other conversation, is that, if they're not competing on every single property and having to do huge appraisal gaps, and the need for cash is a little bit lower, that's also probably playing into comfort for first time buyers. Hilda, you're raising your hand.
Yeah, good morning, or is it good afternoon out there? It could be. I'm calling from the West Coast, but I want to tell you, Troy, the work that you put into this presentation is just fantastic. Your people should be very, very grateful for the amount of information that you give out. It's pretty stellar. I wanted to ask, as third party looking out as potential investor, what do who are your major employers out there, and what are the levels of income and positions available in those frontiers? Out here in Silicon Valley, the disparity of affordability is just growing bigger and bigger every day, and it's becoming very problematic at the low end. But our low end is 1.1 to 1.4. And so everything over 5, 8 million selling very fast. But the first time home buyers are having a heck of a time. What can you tell me about your area?
Yeah, well, I mean, and please, like, if you guys want to jump in, I definitely don't know everything, but the average employer or employee, like, we have a very service-based economy here in Columbus. So our biggest employers traditionally are like Nationwide Insurance is based here. JP Morgan Chase, I think we have their second largest employment center here next to, maybe it's in the top three between Arizona here and New York City. So they employ like 15,000 people here. And then we have a very large children's hospital. And then Ohio State University. They have 50,000 students. So they're also another big employer. And then we've also had several companies, um, several companies like Meta, all the ones that you're used to, but lots of data center building. And then Intel is building a foundry here. So that's led to a lot of construction jobs in the short term. But obviously, once that gets finished, there'll be like 2,500 jobs there. And then the largest project ever in Ohio history is just coming online this summer. But if you've heard of Anduril, they're a defense contractor that's big into building drones, which is obviously bigger in the news now than we ever knew 2 years ago when they chose Columbus as their headquarters. But that's going to be, I think, 7 to 8 thousand jobs over the next 5 years. And they're building, again, they're building drones. Our secondary airport here is a big logistics hub just because of the location, being in the Midwest. And they bought, I can't remember how many hundreds of tens of thousands of square feet of maybe hundreds of warehouse space that was already existing, and then they're also going to be building a bunch. So that's like kind of a cross section, but again, very service based. And then I would say like our manufacturing that we do have is pretty like cutting edge, like data center and like Andrel and that sort of thing. We don't have a lot of, like, well, I guess we do have Honda. We have Honda's, I think, largest plant is also in a suburb of Columbus. So I guess overall it's a very good mix, which, I
Yeah, it
mean,
sounds like it.
I think
It's
that Columbus, to be honest, and I own a little biased, but I do enough research to like feel like I'm not as emotional as others. But in my opinion, don't tell anybody else, but I think Columbus is like one of the best markets in the nation to invest in my opinion, because we still have, below the national average in terms of average sales price. And so, compared to where the economy is going, I think we're in a great position.
Yeah, it sounds like it. And it sounds like the diversity in your employment is also a benefit. It almost sounds like San Jose 20 years ago, or less than 20 years ago, actually, about the same time the social media companies came online. For those of you who are not familiar with San Jose, now we're the epicenter of high tech. But we used to be known as the bedroom city, as the sleeper city. 87% of the residents there drove out of the city to work. So whether that was 10 miles or 20 or 30, but no, everybody came. We've always been the safest city, or one of the safest, largest cities in America, but it was primarily because we had a bunch of stakeholders. So they really vote, and they're really active in their communities, that kind of thing. But in terms of employment, everybody was commuting long distances, I believe, with the exception of the university. And now San Jose State is one of the most sought after. I mean, who would have ever thought our little local college would have been the most sought after? But it's because it's a feeder directly for Apple and NVIDIA. They hire like 60% of their employees from that school. So it sounds like you guys are in a really great position for future growth, which I love. And I would, if I was a local agent there, I would really start blogging and talking about these scenarios that you have there, because there could be a lot of college students graduating looking for jobs, and they're looking for, relocation opportunities. And a lot of their parents are willing to leverage, some of their inheritance in advance so they can get a leg up. But it really does sound like they just have a lot going on there. I got to come out and visit for sure.
Yeah, you should. And the other thing I forgot, which this isn't super popular in the news right now, but Les Wexner is from here. So all of the limited companies are like Victoria's Secret, Abercrombie, all of those are actually based here as well. And so because of that, we have a kind of a uniquely strong fashion community here. As well. So it's no one in the world outside of Columbus would ever think that Columbus, Ohio would be a center for fashion, but because of Victoria's Secret and the Limited, we actually are one of the top five most important cities in the US when it comes to fashion.
I'll be darned. I love this.
So
That's just fantastic. So yeah, get out there. You guys have a lot of uh, great things going for you. That's pretty exciting.
yeah. All right. Well, does anybody else have anything or are you guys good?
Roy, I was just gonna say, don't forget about White Castle and Wendy's.
Oh yeah. Well, Wendy is more, but yeah, White Castle too. You're right. Yeah, there's a lot of interesting things about Columbus for sure.
Well, it's the largest public university in the country.
Yes, is it? I know we go back and forth with somewhere in Washington. Is it the University of
Now,
Washington?
I don't know what it is, but I think OSU is bigger and has been for a while. Over 40,000 kids, their own little city.
Yeah, for sure. Well, and
You
I
know,
think it was important for Intel It's funny that Hilda, you say that about San Jose State, but I think that was one of the main reasons why we ended up landing the Intel deal was because there were a number of reasons, but one of them was definitely Ohio State was willing. They created a degree program that specifically, um, was in line with creating skilled workers for that business. That was one of the deals. So, okay. Well, you guys, I guess everybody have a great rest of your week and the rest of June. And I guess by the time we meet again, it will be after the 4th of July, and we will be on the, I guess, downward slide back to school starting again. So for all of you that are already tired of your kids, it won't be long. All right, guys. Well, have a great one. And as always, email me if you want the slides. We'll be on YouTube here within 48 hours. And have a great day. Talk to you soon. Stay cool.